Hello, hello. Are you going to log on? Hello, everybody. This is Erin Andrews with Straight Line. I just want to give it one more minute for people to hop on to our webinar. We had getting up there in numbers, so I just want to make sure we give people time. so they catch everything. We'll start at 11:03. Alrighty, we're gonna get going. I'm Erin Andrews. I'm one of the owners of Straightline Accounting. My husband, Jake Andrews, is a panelist on this. You can probably see his name up there. He'll be helping field any questions and whatnot during the webinar. Thank you for attending, and I apologize for last Thursday. We were supposed to host it. It was, my computer system just did not like me that day, so we had no choice but had to reschedule. And so let's just get going on this. Bear with me while I get this set up. Okay, so I'm sure you guys have seen, we haven't done a webinar in quite a while on the PPP. It's been sort of quiet, and the changes that came out didn't really warrant an updated webinar. There was some stuff that came out a couple months, about a month and a half ago, about self-rentals for basically owner-occupied self-rentals and stuff like that, which I'll touch on briefly. But other than that, everybody, we've gotten tons of questions, and I understand the concern about the PPP forgiveness application, when to submit it, if you can submit it, what you use to submit it, and all the stuff that goes into it. And we just want to answer some of those questions today and try to give you the best information that we have available, knowing that the election is around the corner, literally a week from today, and information will probably change and be updated most likely after the election. And then also as we get closer to 2021, they tend to give a lot of tax legislation and guidelines, unfortunately, for the current tax year towards the end of November, mid-December, sometimes the last week or two of December. So there's still going to be a lot of changes that come up, but for the most part, the information that we have now, some of it I think will stay relevant and some of it might change a little bit, but gotta do what we gotta do. So housekeeping items, all questions are to be asked in the Q&A section. You can ask them. Jake will do his best to answer some of those questions as we go along. I'll also try to take a break and look at them occasionally. You can raise your hand when we get to the open forum. That's at the end. If you want to ask a question, we'll unmute you when it's your turn. We will have these slides and additional content available, and we will email them to you when they're all set. They'll also be available on our Facebook group, the Straightlines Business Owner Survival Guide, and our website. And also, as I said before, please just check your spam or junk filters to make sure you add the domain to this as a safe sender, the @straightline.com. We have found a lot of of our emails are going into a spam or junk. So please just make sure you add us to safe senders. And again, this is not intended to be legal advice. If you have very specific questions about your business or own situation, please contact your accountant directly. And again, legislation and further guidance for many of the items are still unclear and pending, which is crazy. So, brief overview of the Paycheck Protection Program. The original intent was to provide 2 months of forgivable payroll expenses, assuming the borrower retains employees and maintains pay levels during the required time frame. And it was to provide funding for the forgivable rent, utilities, and interest during that time, assuming the expenses did not exceed 40% of your total forgiveness. Obviously, some of this stuff has changed a little bit, but it's still basically the same thing. That's what is what the funds were intended for and still remain for. Excuse me. So quickly to go over, forgivable expenses include a 60% minimum of payroll costs. Payroll costs are defined as salaries, wages. That includes commissions like severance, sick pay, health insurance paid by the business, retirement match, and employer paid state and local taxes. To be clear, it does not include employer paid federal taxes, so no employer portion of the Social Security or Medicare, or employer FUTA, which is federal unemployment tax. That is not included. That is still required to be paid out of pocket. And then a 40% maximum on non-payroll costs. So you have to spend at least 60% of the funds on payroll costs and no more than 40% towards non-payroll costs. Obviously, if you spend more on non-payroll, they'll just be limited to 40% of the PPP loan amount. That is on interest on real and personal property loans. That is basically anything that's not unsecured credit debt. So unsecured credit debt is something like a credit card. That is not included. So if you have a mortgage, which there's some caveats to that came out like about 6 weeks ago, or a auto loan, those are considered interest that's qualified. So then rent or lease paid for real and personal property. Again, August 2020, updated rules on owner-employee rent-related costs, and not all rent paid during covered period to a related party is included as forgivable expense. I'm going to touch on this a little bit. Like I said, there's some more information that goes into it. It doesn't affect everybody, but it does affect a lot of clients. As an example, my husband and I own Straight Line. We also own the building that we have in Plymouth, which is Alexander Realty Trust. We pay rent to that building, but the rent is actually limited. The rent forgiveness amount of the rent is actually limited by the mortgage interest amount paid towards that mortgage. So even though the rent payments that we make every month are actually to cover all of the costs that Alexander Realty Trust pays, only the portion of the mortgage interest is now covered. So that's wonderful little caveat. Anyways, it also includes utility payments, gas, electric, water, trash, sewer, telephone, and internet. Those have not changed. So payroll costs include, a brief overview again, compensation to employees in the form of salary, wages, commissions. So a 24-week covered period, non-owner employees. So just when you're thinking of employees, they are non-owners. The maximum is $46,154 during that 24-week period. 8-week covered period, non-owner is a maximum of $15,385. Payment for vacation, parental, family, medical, or sick leave, excluding any of the sick leave that you paid through the FF Family First, the credit that you got, I forget the acronym, Families First, RCA or CRA, you got a credit for that. If you did take that through your payroll, that is excluded for the qualified sick leave, but if you just paid regular sick leave out to somebody, that does qualify. Allowance for separation or dismissal, so that's severance pay. Payment for the provision of employee benefits consisting of group healthcare coverage, including insurance premiums and retirement. So if the portion that your business pays for health insurance for your employees, dental, vision, and then your retirement match. Payment of state and local taxes assessed on compensation of employees. So that's would be state unemployment tax and any local taxes that the employer pays. So that would also include, for Massachusetts, the employer portion of the MAPFML if you are over that 25 employee portion. And then for a sole proprietor or partner, net earnings from self-employment, which we do cover a little bit a little later. I'm going to rush kind of through this because this is a review of what we've gone over like beaten kind of like a dead horse with this. So payments to furloughed employees during the covered period are eligible for forgiveness. So a lot of people wanted to know, okay, I'm just paying people, like when there was the shutdown happening back March, April, May, June, if they could just pay people to pay them, even though they weren't actually working, yes, that is included for forgiveness. So that pay is included, even if they could not perform the day-to-day duties. And then employees' hazard pay and bonuses are eligible for loan forgiveness because they constitute supplements of salary or wages. So if you paid hazard pay, if you are in a cleanup business or I don't know, healthcare business, it is included. And or maybe you just gave bonuses to your staff, that's also included as well. Those were common questions we got a lot. All right, 1 second. I just want to make sure everybody can hear me okay. I have a new microphone, and one of my first webinars, I sounded like Darth Vader, and I just want to make sure that this one, you can actually hear me and I don't sound like Darth Vader. So, okay. So payroll costs not included, any compensation of an employee whose principal place of residence is outside of the United States, compensation of an individual employee in excess of an annual salary of $100,000. So that doesn't mean anybody that makes over $100,000 you can't include. That means any compensation over $100,000. So they're capped at that $100,000 limit, and that's the cash compensation. So that does not include the health insurance benefits or the employer, retirement match benefits. And then this is what I was talking about earlier when I couldn't remember the acronym. It's not included if you took that qualified sick and family leave wages, which you got a credit under the FFCRA. I actually think I got it right. It's impressive. A lot of acronyms right around. Thank you, Mark. Okay. So eligible non-payroll costs. So must be business related and in existence on or before 2/15. It's interest, not principal, on mortgage, real or personal property. Rent on real or personal property. So like I said before, office, storage, equipment leases, auto leases, and certain rules apply to self-rentals. Again, back to if you own a property, it's in a trust or an LLC, which is very, very common, especially with S Corp and small business owners. You are limited to the amount of non-payroll costs that is forgivable or that are eligible for forgiveness. And then another caveat to that is some people, if they had an SBA 7A or 504 loan already, they had it just for their properties. There are some businesses, I actually have one for the Alexander Realty Trust. Some of those loans, not all of them, but some of them were actually paid for 6 months by the SBA as part of the CARES Act, which was obviously a really great benefit. But now if you are counting on rent paid because you covered other expenses, part of the rental payments, now it's not included at all if you had some of that payment. It's if you have questions about this, about self-rentals, and you did count a lot towards this, please talk to your accountant about that or set up an appointment to speak about that if you think it's going to directly affect you and your forgiveness. Again, utility bills, and then if it's not listed above, the answer is no. These cannot be more than 40% of the total forgivable debt. Exciting stuff right now. So covered period. You hear a lot about covered period, and there's different variations of the covered period too for payroll costs and non-payroll costs, which I've gone over in a couple webinars before. I'm not really going to discuss like choosing an alternate covered period for payroll versus a non-payroll cost. You can look at the prior webinar we did in June, and I could really dive into some of it, but the basics are you have an 8-week or you have a 24-week cover period. For those of you that received a loan after June 5th, the cover period is automatically 24 weeks, and there is no option to choose the 8-week period. However, per the SBA, regardless of the cover period elected, you can submit forgiveness applications as soon as the funds are spent, AKA have an interim cover period. There's more information that I'm going to cover in the next slide because there is caveat is my word of the day, caveat to this as well. So a lot of people already spent the funds. Maybe they got the loan back in April. They had trouble spending the 8 weeks, and they found out there's a 24-week option, and that was great because they could extend it out, but they actually spent the funds within like 14 or 16 weeks, which was very, very common along actually a lot of our clients. Now they can submit the application early, but they are going to be subject to these stipulations, which is, so you can apply before the 24-week period is up. However, you're going to need to prorate amounts based off the 24-week period. So what that means is a borrower elects a 24-week period, or it's an automatic 24-week period, but exhausts their funds and chooses to apply for forgiveness 16 weeks after their cover period had started. So what you have to do is prorate the amount of compensation maximums for your employees. So the cover period will still be 24 weeks, and compensation maximums for non-owner employees will be prorated by a calculation. So let's say you're doing 16 weeks of you're doing 16-week quote unquote covered period. You're gonna do 16 divided by 24. So you did 67% of that, and then you're gonna multiply the 67% by the maximum compensation allowed per employee, which is $46,154 during that 24-week period, and bring it down to the $30,769 for that 16-week period. I'm sure you're confused, but basically you're just maxing out. You can't just because if you had 16-week covered period, one employee can't make $46,154 and have that forgivable. Anything above the $30,769 for that 16-week period is not forgivable. I hope that makes sense. If you use 24 weeks, you count the payroll and non-payroll costs for the full 24 weeks as well. Well, you're not, so 20, no. So you would only use, so if you use a 16-week period, well, if you use a full 24 weeks, then you use the 24 weeks. It's a maximum $46,154 per non-owner employee, and then just whatever expenses you had during that period. You still have to pay the 60% has to go towards the payroll costs, and 40% max towards the non-payroll costs. If you do like choose like a 16-week covered period, you don't prorate those expenses because there's no maximum they didn't say you can spend a max amount per rent. It was just whatever those expenses are during that 16-week period. I hope that answers that question. Like you wouldn't take the expenses for 24 weeks. And then also any salary or wage reduction that you might be subject to if you're over the $50,000 loan amount would also be prorated, and that calculation was way too fun to put on this slide, so we're going to hold off on that. Just want to get some polling questions here. Please just, if you don't mind, taking a second to answer this. Huge issue that most people haven't even discussed, and actually, to be honest, is actually one of the bigger. There's a lot of people really freaking out about, should I submit my forgiveness application? In our opinion, what they actually should be concerned about right now is the tax planning implications for 2020 and getting their books up to date with the proper data so that you can actually plan on this properly. That's actually where people should really be worried about and be focusing. If you're not thinking about this, that's not on your radar, you really need to get with your accountant or talk to your accountant about this. Again, the tax implications, we don't know them exactly yet. However, having your books in order so that as soon as we know the legislation, what they're going to do, that will just save you a ton of time. It can save you thousands of dollars in tax that you could just be throwing away. So yes, worry about the forgiveness application, but you really should be considering getting your books up to date, having the expenses categorized properly, and talking to your accountant about tax planning. So I'm going to end the polling now. Excuse me. I'm going to share the results. So my accountant's all over it. No, I haven't even thought about it yet with 16%. And no, I'd love to learn more. If you'd love to learn more, which is 32%, feel free to give us a call. We are focusing on tax planning right now. All right. Next, moving on. So owner-employee limitations. I could have put the definition in here for owner employees. Basically, if you own the company, if you're an S-Corp owner, or if you're self-employed and it goes on your Schedule C, then you're an owner. You have to be, it is more than, hold on one second. The definition is, sorry, more than 5% more than 5% ownership in a C or an S corp. So if you own more than 5%, you are considered an owner, and you are an employee of the company. Like you get paid through the company, then you are an owner employee. So if you're under 5%, you're not subject to these limitations. So owner employees, and I'm going to go down through the different entity types in a minute after the slide to break down what's included, but owner employees and self-employed individual limits. The amount of loan forgiveness requested for owner employees and self-employed individuals payroll compensation. It's for the 8-week period. It's 50 seconds of 2019 compensation, or $15,385 per individual, whichever is less in total across all businesses. So if you do your math and you made, let's say your total wages in 2019 was 50,000, and you divide that by 52 times 8, that's 7692. That means that's the total amount you can take towards for forgiveness. And if you own two, and you're on the 8-week period, if you own more than one business that received the PPP funds, you're limited by that amount across all businesses. So it's not 7692 for one business and then an amount for another business. It's 7692 total, or 15,385 if you did earn the full $100,000 in 2019. The 24-week period is similarly done. It's 2.5 months worth of 2019 compensation, or 20,833 per individual, whichever is less. Same calculation. So a lot of people, this kind of they came out with this in June, I want to say. This really threw us through a loop because a lot of people are small business owners, and we do tax planning, and part of tax planning is managing payroll amounts for business owners and not giving people super high payroll checks. So this directly affected some of the PPP spending. Fortunately, I think with a 24-week extension, that really helped because they brought back some employees and they could use other expenses. So, and then also, if you're applying before the 24-week period is over, you do need to use those proration calculations I discussed in the prior slide. So you'd be limited even further by these amounts if you decide to apply earlier than the 24 weeks. So breakdown by entities. So S corps and C corps. C corps owner employees are capped by the amount. So their compensation, what it includes is their 2019 employee cash compensation up to $100,000, like everybody else, and then employer retirement and health insurance contributions made on their behalf. So that's what you can add, you add all that stuff together for 2019, and that's what you calculate that 2.5 divided by 12, or the 8 divided by 52. S corp owners is a little different. So you're capped at the amount of 2019 employee cash compensation. So basically what's on your W-2. So, but employer health insurance contributions made on their behalf cannot be separately added because these payments are already included in their employee cash contribution. So what that means is, S corporations, if you have health insurance through your business, the business pays, for your health insurance. At the end of every year or throughout the year, you're supposed to what's called gross up your pay. You're supposed to include that that portion of health insurance that's paid for you by the business or your family policy in your W-2, your federal wages and your state wages. If they are not, and if your accountant's not doing it properly for you, then you would have been limited further by your 2019 limits that you can be forgiven. So that's the reason why they're not included, because you're actually supposed to include those amounts in your wages every year. It's a tax compliance issue for S corps, but you can include employer retirement contributions. For Schedule C or F filers, F is for farm, are capped by the amount of their owner compensation replacement calculated based on 2019 net profit. So when you applied for the PPP loan, if you didn't have any payroll, your PPP loan amount was based on 2.5%, 2.5 of your 2019 net profit. So basically it should be a wash. If that's all you calculated it on, you didn't include payroll for your employees, then it should be a wash. The thing should be completely forgiven for you. Retirement and health insurance contributions are included in self-employment net income and therefore cannot be separately added to their payroll calculation. So basically you just look at your net income on, I think it's line 31 of your Schedule C, and you have to provide this documentation too, and you figure out that it's 8 divided by 52 or 2.5 divided by 12, and that's what you look at for your forgiveness amount. It's actually pretty simple for Schedule C subcontractor owners only. If they did have payroll that's applicable, then it's just the normal payroll amounts that you paid your employees. Then general partners, so that if you're 1065, like an attorney or something, are capped by the amount of 2019 net earnings from self-employment, reduced by claimed section 179 expense deduction, unreimbursed partner expenses, and depletion from oil and gas properties, multiplied by 0.9235. And those are, again, retirement health insurance you cannot add them in. If you have questions about that, I know that's very confusing. If you have a general partnership, please talk to an accountant. I don't really want to get into that too much. We don't have a ton of general partners that come on here, but I know it's kind of confusing, but please call your accountant or if you have questions about that to discuss that directly. All right, quickly to go over what can reduce your forgiveness. The CARES Act specifically requires certain reductions in a borrower's loan forgiveness amount based on reductions in full-time equivalent employees. So during your covered period, you're required to maintain some FTE counts based on prior look-back periods. That can reduce your forgiveness if you did not maintain or exceed your FTE requirements. You disregard this if you have a loan for $50,000 or under. This is a new thing that came out with that 3508S form that came out like 2 weeks ago that everybody wants to apply for right away for forgiveness. If you're under $50,000, you can disregard this, which is great. And then the other way to reduce forgiveness is employer salary. So if you have reductions in employee salary and wages during the covered period, that can also decrease your forgiveness. And again, disregard this for the loans under $50,000. That was removed as a stipulation for them, which is great. And there's also, I failed to mention this, there are FTE reduction exemptions available, as well as wage reduction safe harbor available. I did go over those in a lot of detail, like quite a bit of detail in our prior webinar in June, and those are saved. If you wanted to get like a refresh on it, I do recommend watching that prior webinar and downloading the guides, because I gave you examples, step-by-step walkthroughs. Also, there's a reduction due to payroll costs not meeting at least 60% of total spent on payroll. So if you don't spend 60% of your funds on payroll costs, then that reduces it. And there's a calculation in my prior webinar for that. And then also for any of you that received that EIDL grant or like / advance, that will dollar for dollar reduce your forgiveness that you receive. But I think all of our clients, we've already taken that into consideration. We received some of the advances. I just set the money aside and I just plan on paying it back as soon as, I guess I could do it any day now. But you will have to, so if you received a $3,000 advance, automatically, and your loan was $100,000 and you received a $3,000 advance, automatically you only have a max of $97,000 forgiven because of the EIDL grant. Okay, next polling question. So we just wanted to get a feel for who's like back to business. There's lots of states that come on these webinars, and I don't know if anybody know this. My husband and I, actually Jake, just moved to Florida in August. We work fully remotely, but state by state is very different. I'll just say it that way, how they allow businesses to operate. So, and it's really good to see people doing better than normal. Give us a couple more seconds. All right. I'm gonna give it 10 more seconds. So 43% are back in normal operations. That's great. Unfortunately, 24% are limited, but 24% are doing better. It's pretty cool. I can actually show you guys. And I'm really sad for the businesses that have been not doing so well. But hopefully, as months go, we can all get back to normal, or whatever normal is now. All right, we're halfway through. So forgiveness overview. So what you want to do is you're going to apply directly with your lender, not the SBA. The application can be filed 56 days after day 56 of receiving the funds, but no later than 10 months after the end of the borrower's covered period. So there's been a lot of questions, which is the next point here. All loan payments not forgiven, including interest, are deferred until the later of 10 months after the last day of your covered period or receipt of final approval or denial of forgiveness from the SBA. So a lot of people are contacting us asking, my payment's due in December. My first payment's due in December. What do I do? No, it's not. Your payment is not due in December. Your payment is due 10 months after the end of your borrower's covered period. So let's say you take the full 24-week covered period. And also, to be clear, the covered period, if you do like a 16-week covered period, that means you're applying the 17th week that you have in the covered period. If you wait until your 24 weeks is up, then you're a 24-week covered period. I'm going to repeat that. So let's say your 24-week period's up, even though you spent at week 16, but you just happened to wait until after 24 weeks, because maybe you got the loan in April and you just are waiting. You're a 24-week period. So it would be 24 weeks from the date of the receipt of the loan. Then it's 10 months after that date. If you apply on week 17, then for a 16-week covered period, then it's the end of that 16-week covered period. I'm not sure if that makes sense, but I just want to make that clear. So a lot of you are waiting based on probably recommendations of ours and their banks and whatnot, but a lot of you will already be that 24-week period. So really your first payments aren't going to be due until the spring. And then let's say you wait to apply even on the last day of the 10th month. My understanding is your payment's still deferred until you get approval or denial from the SBA, which is an additional 150 days. So payments are not due. However, interest is accruing. And if you don't, let's say you get partial forgiveness, you will have to pay the amount of interest on the forgiven amount. They'll roll it into your loan. And I'll go over the loan terms in a minute. All right. So the loan can be forgiven up to the full amount of the loan, less that EIDL advance / grant, obviously, plus accrued interest. So they're also technically forgiving that interest that's accrued through the approval process forgiveness application. Okay. You cannot have forgiveness of qualified costs in excess of the loan amount, so you can't get forgiveness for more, obviously. And the forgiveness application is filed directly with the lender, not the SBA. I just like to repeat that because it goes to the lender and the lender then submits it to the SBA. Caesar, I will be touching on your question in a minute. Going over that in a second. All right. Sorry, I'm trying to clean up the Q&A. The lender must issue a decision to the SBA in a loan forgiveness application not later than 60 days after the receipt of a complete loan forgiveness application form from the borrower. The reason why I highlighted the complete loan forgiveness application form is because that means not only do you have to submit the loan application form, but you also have to submit all the supporting documents. That is when it's considered a complete loan forgiveness application. So our wonderful tax clients who we love very much, we tend to get a lot of piecemeal from them for their tax documents. Technically, we can't start the tax return until we have all the information, right? Same thing. They can't start working on your loan application until your forgiveness application, until they have all of that documentation. So when submitting these loan forgiveness applications, please be aware that you are required to submit loan documentation, the additional backup documentation for all 3 applications. To be clear, you have to do backup documentation for all 3 applications, which I'll go over in a minute. And talk to your lender about what they're requiring to submit. Every bank is going to be different, and also Every bank is allowed to have their own form and not use the SBA application itself. I believe they'll accept either or, but some banks might be making their own, some banks might not, who knows? So if the lender denies your forgiveness, borrower may subsequently request that the lender reconsider its application for loan forgiveness unless the SBA has determined the borrower isn't eligible for a PPP loan. You can also, I don't think I put this in here, but you can also go back and try to appeal that with the SBA. I hope that doesn't happen, but there's a chance. So that might just turn into kind of a mess. But the SBA, once they get the application from the lender, they must issue an appropriate forgiveness amount to the lender not later than 90 days after the lender issues its decision to the SBA. So so basically you have another 150 days that you might not even hear back about your loan forgiveness. And if applicable, the SBA will deduct the EIDL advance amounts from the forgiveness amount remitted to the lender. So the lender, what I got from this is that the lender might submit, like they might say, oh, you're 100% forgivable. This loan's 100% forgivable, not taking into consideration the EIDL advance. Then the SBA sees it, they might agree and say it's 100% forgivable, but then they're going to deduct that EIDL advance because the bank did not take that into consideration. Okay, did I just skip on? No, sorry. Okay, now this is the big question. Do I apply now or do I wait? This is entirely up to you and if your lender is ready. I will say, I was talking to my accounting gang just yesterday, and banks are sending out emails to their clients, their customers that apply with them for the PPP loan, saying that big scary email letters and font and caps saying that we must have this information by October 31st or you will not be eligible for forgiveness. This is not true. It is a lie. They're just trying to get people to apply so they don't get slammed with applications. There is a deadline date on the top of the application that does says 10/31/20. This is not accurate. I don't know why they choose to keep it on the forms, but it's not accurate. I read every IFR and FAQ about it. It is not accurate. So it's not a real thing, even though they're keeping it on the forms for some silly reason. So it is up to you. However, Straight Line's approach and several of our colleagues is for any borrowers under $150,000, we are recommending holding off on applying. There is still a chance there will be blanket forgiveness for these borrowers, meaning why do all this work when there's going to be blanket forgiveness for this amount? We don't know this. Again, I believe things hinge on the election, one way or the other, I don't know. And also, why pay someone to do this for you if you can't do it on your own? Which again, I don't really think I recommend having you do it on your own, but we just really think we should hold off. And hold off, we don't know how long to hold off for. We don't know that answer, but we just still recommend it. For borrowers over $150,000, what we are doing, we are going to start preparing and submitting applications after 11/10. So that's what and that's for borrowers that primarily use their funds for payroll costs. That is what we're doing in-house, and that is what a majority of our colleagues are doing. There are some special circumstances for our colleagues that are in different industry. They specialize in industries, but for the most part, in every single article I read recommending from the AICPA, the Journal of Accountancy, wait. And that's not us saying it because I just don't feel like filling out your application. It's because all these changes that have been going on, we just got updated stuff 2 weeks ago with a brand new application. If you're going to do all this work and then it's going to change, and we don't, as of right now, you're only allowed to submit this once. So if you submit it once and it's wrong and you don't get qualified forgiveness, I don't know the appeal process for the SBA, but I can't imagine it's going to be that easy. Our goal, however, is obviously tax season is coming for us. So the reason why we want to do $150,000 and over after 11/10, we don't really see that. We don't see that changing very much. The requirements, the documentation, we think that's going to be pretty much the same. They're really talking about the under $150,000. So again, we really want to get, the other reason is we want to get some final legislation on tax implications, which probably won't be released until late November and December, possibly as late as mid-December. And in any circumstance, forgiveness determination won't come through until 2021 in any scenario, which will tie directly into tax implications. So no matter what, you still will not get forgiveness until 2021 or word on forgiveness. So, which directly ties into tax implications, tax planning. So, and all the changes they keep making and adding and taking away things, our thing is, why rush? We saw how people rushed to do some applications when we were first applying for the forgiveness loan. They had to redo applications sometimes 2 or 3 times. So this is our opinion. If you are our client and you really want to apply, if you're under the $150,000 and you're just like, I just want to apply, I don't care, then we can do it for you. That's fine. But we aren't going to start applying. And we also, for our timing wise internally, we aren't going to start doing to 11/10 because we just have, that's just our calendar of our thing. So we won't be doing it between now and 11/10. One more question. If we use 24 weeks, but our payroll for individuals cap the threshold in place, do we need to consider percentages at all? Do we need to include all 24 weeks for the payroll in our calculations if we figure to reach fully forgiveness at 16 or 20 weeks? Aggie, I'll have to come back to that because I'm kind of confused by your question, but I have to take time to think about it. Okay, so the forgiveness applications, as we all know, a couple weeks ago, a new application was issued if you have under $50,000 or $50,000 or less. If that's what you received, then the 3508S, I'm assuming that means simple. 3508EZ filers, this is this is who we were going to, this is the application we're going to use for almost pretty much every single client that we had. And it's if you check off one or more of the items below, it applies to you. So not all the items that apply to you, one or more has to apply to you. So self-employed individual, independent contractor, sole proprietor who had no employees at the time of PPP loan, or did not reduce the salaries or wages of their employees by more than 25% and did not reduce the number of hours of their employees, or experienced reductions in business activity as a result of health directives related to COVID-19 and did not reduce the salaries and wages of their employees by more than 25%. That is actually the bucket that most people fall into prior to the newest application coming out. So if you're under $50,000 or under, assuming they change nothing, that's where you're gonna go to the 3508S. If you're over $50,000 and up to, I believe it's 2 million, you're gonna go with the easy. The 3508 filers, or if you didn't reduce things, are basically for the large businesses or the ones that they reduced things and they didn't have a reason for it. Like they didn't meet the exemptions for the FTE or the safe harbor. So $350,000 loan, 24-week period ended 10/20. We spent more than that's on payroll only. Would you recommend we file mid-November, and should we include non-payroll costs even though not needed just in case? I think you're just giving yourself way too much work if you do non-payroll costs. If you have if your payroll costs exceeded the loan amount within the 24-week cover period, why give yourself more work, more record retention requirements, more audit requirements? Just submit the payroll records. That's my opinion. Unless you have some questions about ownership issues and pay on that. That's kind of like an individual response. But my opinion, if you exceeded the payroll cost in 24 weeks, the payroll amount over the loan, then just submit that, make it easy. All right. So just to go over the under $50,000 loan application, it's a quote unquote streamlined application for borrowers or $50,000 or less. So the good thing is you're not required to show calculations of how you came up with the forgiveness amount. However, you need to have the calculations and documents readily available, the documents that you use for the calculations, should they ever be requested. They are required to be kept. So you don't have to do your calculation, but you have to keep it. So if you're ever requested, you have to have that on file. You provide the forgiveness amount you've requested and you certify the conditions. There's a bunch of stuff that you have to say that you qualify for this loan and why. And then one of the big things for this, for the under $50,000 loan people, was they are no longer requiring you to prove, the reductions in the full FTE employees and the reductions in employer salary wages, which is actually part of the bigger parts of the calculations. So that's actually really, that's great for the under $50,000, but you are still required to submit backup documentation with your application. There's a misconception that you don't have to submit that documentation, like it's like a tax return where you just put in the information and, or as some people tell me, we do the clicks. Anyways, but you are required to, like, if you have payroll records, utility receipts, all that stuff, you are required to submit documentations, but you are exempted from the reductions and forgiveness for the full-time FTE thing and the employee salary or wages. I can tell you the reason why they did this, but it's kind of boring.
I'll try. Can you hear me?
Oh, that's Jake. Yeah, hi, Jake.
I was just looking at the actual forms with the instructions for the applications themselves. These are big. They're almost like cover letters. So what you're saying, you've got to really document everything and attach it to this application, but this application is different from the original PPP application where there was actual calculations being done. This is completely much more of like a overall general basic form that there's going to be a lot of information that has to be attached to it for this to go smoothly.
And we think that's the reason why the banks that are open, we think that's the reason why they're pushing, because they don't want to get inundated with all these loan. It's going to be more work for them to process these forgiveness applications than it is for them to process the loan applications themselves. And while we understand that, that's not your problem.
And not only that, there was an article, I forget which, I don't know if it was Wall Street Journal. We had talked about it in the office probably 3 or 4 weeks ago now, but the banks, they still haven't been reimbursed for the cash that they've lent or loaned out. So they're trying to collect on the money for all of these PPP loans. So to me, there is that application process that they're going to have to go through to kind of audit and do what they need to do to go through everyone's applications, but they're, to me, looking to collect money, and they can't do that until everyone starts this application process. So they're trying to force everybody, in my opinion, to get their applications in as soon as possible, which to me, there's no incentive to apply or rush through anything right now at all. Even tax-wise, it doesn't make sense to really move on anything until we have a lot more info.
Yeah. And to be clear, the reason why, because the banks fronted the money. They didn't get the money from the SBA and give it to us. They fronted the money, so they want money. So that's another huge thing too. Okay, so the supporting documentation to submit with the applications, this is applicable to all the applications with caveats for the 3508S. So bank statements or a payroll report from your payroll provider documenting payments to your employees. So detailed payroll journal. You're going to want to show gross wages, tax payments, tax breakout, all that stuff. Tax forms, your 941s, your state unemployment reports, payments, receipts, canceled check or bank account statement showing employer contributions to group employee benefit plans. That's showing, your employer match for your 401k or your simple plan, your health insurance payments for the employees, all that. And then also for the 3508EZ and 3508, if you check the second box indicating you kept the head count and salaries the same on the instructions form, you'll still be required to report the average number of full-time equivalent employees on payroll on January 1st. And at the end of the covered period, this can be done with payroll reports covering January 1st and last payroll of their covered period. This actually, Jennifer Sylvia just asked a question about they reduced some hours and people in the beginning, but now they seem to be fairly back to normal. They also had a couple of people that quit voluntarily. If anybody quits on you, then there's some exemptions for the FTE thing that those people don't count towards they won't hurt your FTE count, which is great. If you laid people off and they refuse to come back, as long as you documented with the state that you reported to the state unemployment system, and you have to submit those documentation that you fought it with the state, and you told them that you offered them a job. They won't count against you. And then there's also certain look back periods to base your FTE requirements on and your wage requirements on. So Jennifer, I can't answer that question for you exactly because I'd have to see, there's a lot more that goes into it. But my gut is saying yes, you'd be fine with the easy form, but I'm not positive because we need to get more specific information from you. So additional information is for the non-payroll expenses, you need your business mortgage interest payments. You need a amortization schedule, of course, or mortgage statements from February 2020 and the months of the covered periods, because you have to prove that you had this prior to February 15th. Business rent or lease payments, a copy of the current lease agreement with the receipts verifying payments, or lease statements from 2020 and from the covered period through 1 month after the end of the covered period. And there's, again, special rules for self-rentals. If you have a self-rental and you are relying on this for part of your expense, please talk to your accountant about what happened with that. And then business utility payments. I did want to say there are certain things for Schedule C owners, which we went in depth in the June webinar about their expenses. There are certain restrictions about that. About qualified expenses for a Schedule C. So if you have questions about that, please refer to that webinar. And anonymous attendee, sorry, there's no name. Yes, this will be available after, and we'll be emailing it. If anonymous attendee, we don't have your contact information, please email. We'll have an email after this. So continued, if you are a sole proprietor, contractor, or self-employed, basically if you file a Schedule C, you are eligible to take owner compensation replacement. If you're taking owner compensation replacement, you have to provide 2019 Schedule C. I discussed this earlier in the webinar. So you have to basically prove what your net income was in 2019, or a drafted Schedule C for January to February 2020. Reviewed or prepared by a CPA if you started your business after June 2019. I will say I don't know many CPAs that will sign off on a quote unquote reviewed Schedule C. That's kind of a big no-no for CPAs, but people could put together a profit and loss. I don't.
That's actually in the wording that it has to be from a.
That's what it says.
Wow.
Yep. That's for any of you that want to get, if you request, if your mortgage company or something needs reviewed financials or reviewed this and that, or it's called a comfort letter guaranteeing your income. Those are actually very, very difficult for CPAs and accountants to give out, and can expose a lot of risk and liability. So just
we pretty much
FYI.
Most accountants aren't even issuing those letters anymore. We're one of them and try not to do them for pretty obvious reasons at this point, to where we're not going to be on the hook for someone's loan that they're applying just for writing a letter. So there's a lot of accountants they'll charge $3,000 to $5,000 just to put a short little letter like that.
A 3-line letter together. Yep. So you can calculate this number by taking 852 seconds or 2450 seconds, depending on your covered period of the net income. I went over this before. Basically, if you're a Schedule C, like I said before, it's going to be pretty easy to get forgiveness. Again, if you receive the EIDL, you will have to provide the EIDL advance amount and the EIDL application number to the bank as well. So I know we applied a lot of our clients for that. We have that on file, obviously. So when that comes down to it, just let us know. All right. One last polling thing, and then I'm going to go. We only have a couple more slides left. So I know we haven't hosted a webinar since June, but we're starting actually a Straight Line University in January with lots of on-demand webinars and training and tools and all that. And we just would like to provide more value to everybody in training. And there's a lot of things I think that this pandemic brought up for businesses and business owners that they weren't aware of and they need to be aware of. So what would you guys be interested in attending? And we're always hesitant to host something like a tax planning webinar because we all know how exciting that can be. But it's actually incredibly important that you attend and you be aware of tax implications for your business and educated as much as possible on the tax savings, tax strategies, tax changes that are out there. Might not be the most exciting topic, but we can put costumes on or something like that during it, whatever. Okay. And the reason why we put in planning, going over budgeting, planning, debt payoff, and cash flow, for those of you that may not find that incredibly useful, an example would be this COVID pandemic just happened. Did you have money to get your business through at least 2 months worth of the pandemic without going out of business? Do you have debt up to your eyeballs? Basically, if you're running a business day to day and you're basically living paycheck to paycheck day to day, you're not in a good position. And more businesses, they stick their head in the hole and they don't think of these things and they just keep working. But I mean, although pandemic's odd, what if you get hurt? What if you get sick, you have cancer? What if anything can happen? So you got to be prepared.
Also, winter for
Winter's coming.
people in the Northeast, different parts of the country that are in seasonal businesses, especially in Massachusetts. Winter is coming. If you're on Cape Cod, things just tend to come to a complete halt. And I had a call this morning with a client that's basically just trying to figure out a way to float through the next 5 months just to keep the business alive, especially as with all of the COVID related mandates, it's basically week to week depending on the number of cases per week. So I believe like Plymouth right now is back to just to go ordering for restaurants. So all the in restaurant dining is kaput for now. So it's huge to be planning. They say cash is king, but if you don't have it, creates a problem. So planning, cash flow, all of that stuff is, I think, just become even more important now because of the pandemic.
All right, so we're almost done. We're almost over. So let's so record retention requirement. So just because you submit this application to the bank doesn't mean that you can just forget about these records. So in addition to submitting the documents with the application, all records related to PPP loan must be kept for at least 6 years after the loan is either forgiven or paid off. So let's say part of it's not forgiven, you have 2 years to pay it, or 5 years. It's 6 years after that, after you paid it off. This includes your PPP loan application documents. When you first went to apply for the application, that also must be maintained. And actually, that is a critical element for your accountant for tax planning too, because everything goes into it, and just knowing your business and what the numbers are based off of. So also, by submitting the forgiveness application, you are permitted the SBA to request any of these documents at any time in those 6 years, AKA audit you. So please keep these records. And what if you don't get forgiveness? So there's a very real possibility that you may not meet qualifications to receive 100% forgiveness. The PPP loans have an interest rate of 1%. Loans issued prior to June 5th are maturity date of 2 years from the date of issuance, by the way. Loans issued after June 5th has a maturity date of 5 years. So let's say 50% of your loan is not forgiven. Let's say you got $100,000 loan, $50,000 not forgiven, and you submit the application and you get, and then your payments are going to start 10 months after your covered period ends. So you're going to start in May. Your loan period now to pay off that $50,000 is very small. So that $50,000 is going to be amortized only over, it's going to be well less than 2 years. It could be even under 1 year, depending on when you submit your loan application. So just be aware of that, and you're going to have very high loan payments if you don't have forgiveness granted. So it's not loan maturity date after 2 years of the forgiveness or determination of forgiveness. It's from the issuance date. I don't think people know that either. So you need to kind of, that's why it's so important. Oh, it's a 1% loan over 2, whatever. No, it's not 2 years. It'll be less than that. Your 2 years started when you got the funds, my friend. Okay, or 5 years. All loan payments not forgiven, including interest, are deferred until later of 10 months after the last day of your cover period or receipt of the final approval or denial of forgiveness from the SBA. If you do not apply within the 10 months after last day of cover period, then you have to start making payments. If all or a portion is not forgiven, the lender is responsible for notifying the borrower when the first payment is due, no earlier than 10 months after the end of the covered period. But you have to trust your bank to keep that in track too. And you may pay any amount not forgiven back at any time with there's no prepayment penalty. So if you have the money, you want to pay it back, go ahead. That's not forgiven. Obviously, you don't pay stuff that's going to be forgiven. Again, the EIDL grant reduction to forgiveness is going to, if you received a grant advance / the EIDL, that will be reduce your forgiveness amount. I just like to reiterate that. Once you've calculated PPP loan forgiveness, subtract the amount you received from the EIDL grant, and this remaining amount will be payable under the terms of your PPP loan document, which is why I said earlier that we have our set aside and we're just going to pay it. We're just not using the funds. We have the funds, but we're not going to use them. Fortunately, we don't have to. I just pretend the funds aren't there. So about the taxes, I just wanted to talk about this really quick. They still haven't changed anything. They said the loan forgiveness is not taxable. However, we can't deduct the expenses, which means it's taxable. So we're still waiting to hear about this. Again, I think we're going to find out after the election. But as of right now, the expenses are not deductible. So like I said earlier, what you should be focusing on is actually tax planning and getting your books proper and having the category, all your expenses, your PPP fund related expenses categorized properly in your books, actually as a liability on your balance sheet, so that you're prepared and you have an idea. I would personally like to overestimate taxes and under, but actually I'd like to break even, but that's fine. Either way, we don't know what's going to happen. Hopefully they do it. There is a precedent set that there's a lot of attorneys coming out saying that those expenses should be deductible. So we'll see what happens. And I think we're going to find out a lot in the next month and a half, hopefully sooner. So that's it for this subject. We are available here to help. We were offering the free 15-minute consult that was for the forgiveness, not the forgiveness, the PPP loans themselves. We aren't officially offering the free 15 consult on the PPP forgiveness applications. There's just a lot that goes into it and a lot of data that has to be reviewed. So if you are interested in talking about having us help you with the forgiveness application, just contact us, let us know. But we can't really do a free consult on that. It's sort of a case-by-case basis. If you do want to email us, anonymous friend, it's covidhelp@straightline.com. You can follow us on social media, and we're trying to stay up and post new information as it becomes available. We aren't as good as we'd like to be on the business group because we were focusing on getting the work done. But hopefully things have quote unquote slowed down for us, and we'll keep posting whatever we can. And we'd like to know if there's any other webinars you'd like to hear about next. I know you're really excited about a tax webinar. I am. And then Anna, sorry if I missed this, loans before June can still be converted from 8 to 24 months. Yeah, you can elect whichever one you 8 to 24. There's a whole, Anna, if you watch the beginning of this, the first half, I go over a lot of the covered period. So let me just see here. Is there, anybody has questions? Thanks, Mark.
The only question I'm wondering about, which I don't even know if we can answer right now without looking into it more, is the think it was Kristen asked, related to the interest accrual on the loan. So if you apply, you end up with a difference. When does the accrual start? How does the interest, how is the interest actually calculated on the loan itself? And I'm not even sure if there's if that's going to come from the lender or the SBA.
And I know that a lot of loan documents differed bank to bank. Thanks, Scott. So this was probably also one of those things that differed bank to bank.
Yeah, I feel like it's going to be in the terms of the actual.
But I'm assuming if you only get partial loan forgiveness, they're only the interest that's accrued, they're gonna remove the part that was forgiven, and it'll be the interest portion of the amount that was not forgiven. That I'm assuming is gonna be rolled into the total amount that you have to pay. Like I don't think they're gonna be like, oh, this interest is accrued, give me 5,000, oh, not 5,000, like give me a lump sum right now for that interest. They're probably gonna roll it into the entire loan amount that you have. Because technically they have to rewrite the loans. That's actually what's happening with these. That's why it's the banks are whatever. I'm not too pleased. All right, well, we don't have any questions. I must have been fantastic at providing information. So funny. Again, this will be sent out to everybody. Please make sure you check your junk or spam. But stay tuned for our very exciting tax webinar that we'll be hosting based on your responses. Have a great day. Thank you.